Park Place Investment welcomes you to another episode of Investment Cubed, where we talk about the world of commercial real estate and real estate financing, Silicon Valley and technology startups, and investment and personal finance.
Hi everyone, welcome back to another episode of Investment Cubed. Today we have an amazing guest here to talk about her 37-unit multifamily property in Gainesville, Florida. Elsa Nguyen is an experienced real estate professional with a demonstrated track record in residential and commercial segments of the industry. She is currently focused on creating generational wealth for investors through real estate investments. Additionally, Elsa is currently part of a leadership team entitling a 132-room Silicon Valley hotel project forecasted to be valued at over $50 million by 2023. Before transitioning to the real estate sector, Elsa enjoyed a corporate finance career for almost 2 decades that provides her with a strong financial background in various industries, including telecommunications, investment, and engineering. Elsa is the sole member of Sunrise Development LLC, as well as the Chief Financial Officer of NorthStar Development. Her role consists of oversight and responsibility for deal analysis and financial management for the companies.
Yeah, so I started in real estate in 2001 when I got a real estate license to buy my first house. And the reason I did that was just because I wanted to save money and make the commission. But then I got really into real estate and just really passionate about it. So while holding a full-time job, I kept on buying and selling single-family homes and condos. And I did that for years until I left my full-time job and joined a company that did land development in 2018. And eventually we got into multifamily syndication in 2020. So what I love about syndication is that we can bring together a group of people to as little as $25,000 or $50,000 to buy a property that not too many people can buy it on their own. And by helping investor to get a greater return for the investment, if it's a good property, we can do it better than the stock market. That's what I love about it. So for this particular deal, we can get an 80% return on investment rather than a 7 or 10% return on the stock market. And everyone can do this, right? Everyone can do this while keeping their full-time job, knowing that their saving can go a long way. So this is what I love about syndication, and that's how I got into the business, is that I will help people create wealth at the same time. I can also create a full-time job for myself. Oh, absolutely. So my company is called NorthStar Development, and I joined NorthStar in 2018. The company initially, and we're still doing that, was a pre-construction developer. We purchase land and we add value to it through the entitlement process, and we sell it to a builder or a developer that would take that piece of entitlement and build whether it's a hotels or multifamily. So that has been our focus the last 2 years. The current project that I'm working on right now is in Silicon Valley. It is forecasted to be valued at over $50 million by 2023 once we build this out. And this project we started last year. The investor for this project are actually getting a really good return. They're getting a fixed 25% return on investment. We have some equity investors on this project where they will share the profits with us once the deal is sold. So this one is still going on right now, and we are actually looking for buyer. We have a couple LOIs, but nothing really solid yet. So we're still out there looking for a buyer to turn this over quickly. But yeah, so that's and then this cottages is my is the multifamily project that I want to add on. It's only $3.5 million, but the exit value is expected to be 4.5 in 5 years. Oh, absolutely. So this products right now that we're working on is a 37 units multi-family in Gainesville, Florida. And I love this place because it's right there in downtown Gainesville, which is so quaint. It's 9 different buildings sitting on a little bit over 2 acres, walking distance to downtown. It's 1 mile from the University of Florida, and it just has so much characters to it. Right next to a very famous bed and breakfast area. So the real estate in that area is very desirable. And this property, some of the buildings were built in 1940s, the other were built in the 80s, but it's extremely well kept. What I love about this is that they are renting it under market. So they are renting, the current rent right now is anything between 7 to 750, while the market rent is going between 9 to 950. So I can easily go in and increase the rent without doing much to it. There's some value add that we can do, say like repaint the exterior of the building or repolish the kitchen, but very small repair and maintenance that needs to be done. And we still can increase the market rent at least $150 per unit for the first year. So right now the property is 100% occupancy. The market occupancy rate is a little bit more than that. It's because of university town, but the way we structure the leases is that they have to lease it through the summer months. So that's how we're able to maintain 100% occupancy right now. This property, it will cost us 3.8 million, a little bit over 3.8 in total. NorthStar will secure a loan for 75% of the purchase price, which is a little bit over $2.6 million. And we are asking $1.2 million from our investors as the equity. And with $1.2 million, they will get 75% of the profit, which is projected to be a little bit over $900,000 in 5 years. And this is what I love about the cottages is not only that it's a downtown location, but it is right across the street. They just built, just a couple years ago, they finished the $60 million, 32 acres, what's called a depot park that attracts everybody into that park. On the weekends, they have concerts and they have fairs. This is a tons of things going on there, and it's a $60 million project that they just completed, and that also helps increase the values of the property dramatically. The cottages is also walking distance to restaurants, to shop, trails, museums, and people like this because it's just right there outside of the door. You can just walk there and you have all the amenities that you ever need. Another nice features about this is that right across the street from the apartment is a 17 acres development that are packaging for sale right now. So with the 17-acre development, the city allow for the developer to build 125 units per acre. So it will be there's this massive shortage of housing in Gainesville right now. So I think this is going to be very attractive. It's going to also increase the values of the property. And we may have the potential to rezone our property, this particular parcel, to the same zoning as the one across the street. So if we can rezone it, it will increase the values of the property significantly, because instead of 37 units that we have right now, we can do up to 250, because it's 125 per unit. So we can do up to 250 units because we have 2 acres of land. But that will take rezoning and some work and a little bit of money, which I will look into more into once we close the deal. Of course. So the total return on investment for investors for this particular project is forecasted to be 80%. That means they are getting $961,000 over a 5 years period for a $1.2 $1.2 million investment. So that is the equity that we need to raise is 1.2. The minimum is $50,000. The projected average annual returns is 16%, and the projected cash on cash return is about 7%. So it's starting at 9, and it goes up from there once we stabilize the rental income. So we look at average about 7% at the minimum. Equity multiple is 1.8. And it's a 5 years hold. Our plan is perhaps to refinance in year 3 and pay back some of the capital to the investors so they can take the money and go out and invest some more. But at the same time, they still have the benefits of the appreciation of the property. So we plan to sell it in year 5 and return the capital, the appreciation, and close out the LLC by year 5. And as far as the split, we don't have Prep A, Prep B. We only have one Prep B, which is just for one class. We don't have a fixed percent of return. We're just going to do a straight 75-25% split, where 75% of the profit will go back to the investors and 25% will go to NorthStar. The final note is that this is such an attractive project, and I was just there yesterday, and I fell in love with the place. I love the people. Most of the tenants who live on the property are actually not students. They are either teacher, a professor at the university, doctors who work at the Shen Hospital, which I forgot to mention. Shen Hospital is right there, which employ a lot of thousands of people, and a lot of our tenants are actually people who work there at the hospital. I see a lot of potentials for this property, not just in terms of the cash flow, but if we can rezone this, that will be millions of dollars that we can increase, that we can increase over the period of the holding time, which I did not add onto the pro forma. But yes, we need this by the end of the month, which is December 31st. I need to have I want to be able to raise that $1.2 million by then, so that we can move forward with our removal of the contingency and close the deal in February.